Yes, you are.
Now today we will discuss important aspect of accounting, that is adjustments. Somehow we have discussed it but need to refine the concepts and a bit more things for that. Around there are 5 to 6 adjustments, major 5 to 6 adjustments, of which number one is we have studied, that is prepaid. Actually, prepaid is not adjustment. Basically, prepaid is ultimately adjusted to the expense. So the adjustment of prepaid is expense basically. Similarly, number two is obviously the reverse of prepaid, that is unearned. And unearned is not basically an adjustment. Unearned is ultimately adjusted to income. Done.
Uh, I have a question. So prepaid and unearned, they will be adjusted inside the expense and income account. They
Yes.
won't be separate, but they will just be brought inside the expense account.
Obviously, they will automatically be adjusted. If again reporting period comes or year end comes, then they will be adjusted for the time that has been lapsed from which they were paid until the reporting date. I am giving examples. Let's suppose example, rent is prepaid for 2 months, $2,000. Then so
Yes.
our timeline would be look like this: 0 to 1, 0 to 1, and 1 to 2. And this is the time period during which expense will be incurred, during which expense will be incurred. So per month expense would be $1,000, expense, expense, $1,000, $1,000. Done. And here we have made a payment of $2,000. Now just consider the 1 month period from there to there. We are just considering this. So at the end of the 1 month, when we will occupy the house and our expense will become due, then our expense will become 1,000. And at end of 1 month, what will be the remaining balance of the prepaid? It would be 2,000 minus 1,000. That is, the remaining would be dollar
1,000.
1,000. Then in adjustment, remember my words. In adjustment, we are only concerned with the expense. That is the middle amount. Because the entry would be of expense, and that adjusting entry would be what? Rent expense, debit, and prepaid rent credit. So we are just concerned with the middle amount, that is the expense amount, that is $1,000. So we will make the entry of 1,000. Now what happened here? This $1,000, which is the remaining amount, it is known as unexpired amount. We may call it unexpired rent, or we will call it, this will be the opening prepaid, and this will be called as closing prepaid. And this amount will be known as either expense, or since it is expensed out, its maturity has gone, its validity has gone, its value has gone. Therefore, this will be treated as expired amount, expired rent, expired prepaid. Clear? Now, in question, we may have given this amount and we may have given this amount. So we cannot make the entry for the $1,000. In that case, we have to find out the amount of expense. Are you getting this point?
Yes.
So another example of this would be Mr. X prepaid commission of $2,500 for 3 months. At end of month 1, the remaining balance of prepaid commission was $1750. Done. Now, what is required? Obviously, required is adjusting entry of prepaid. Can you make it?
Yeah. Can I just say it?
Yes. But you have to calculate amounts.
Yeah.
What would be the entry?
Okay, so basically at the end of 1 month, the rent expense will be
Rent
debited,
expense?
and then the
Why?
prepaid.
Why? Is it rent?
Oh, sorry. I mean, I just got confused.
Every prepaid is
The
not rent.
commission.
Ah.
Yeah, the commission.
Like in Pakistan, I used to tell students every bank is not a big bank. So like every
Yeah.
prepaid is not. Okay, fair. Now, what is commission?
Commission expense.
Expense. And
And then the prepaid.
prepaid commission. This entry
Yes.
is fixed. No one can change this entry. The only amount will be the difference. Now, what would be the amount?
It would be 833.
How?
So 2,500 divided by 3.
Not necessarily. It is will be.
And then for the first
No,
month,
no,
it's
no. Read the
830.
question. Not necessarily. It will be divided equally.
Oh.
Getting this? We may divide 2,000 in just like 500 in the first month and 1,500 in another month. So here it is given at the end of month 1. The remaining balance of the prepaid was 1750.
Yes.
Then this will look like this.
Then it's 750.
Yes. Now you got it. So the amount would be
750
done.
for the first month.
Good.
Yes.
And if there is any confusion, just make a timeline like this. This is opening, beginning, this is closing. And this middle section is representing
The 750.
expense. Then now we are concerned with this amount. Entry is fixed and we are concerned with this amount. So we can easily calculate this is 2,500 and this is 1750. So how this amount will be calculated? 2,500 minus
750.
yes. Done. Got the idea?
Yes.
And if
Yeah.
here it is
So
yes.
uh these adjustments, is it the ones that are at the end of the accounting cycle,
Not end
or
of,
is it just for the prepaid
not
and
at the end
unearned?
of the accounting cycle. They are part of accounting cycle, and they are made at the reporting date. Are you getting this point?
Oh, okay. So not at when the prepaid is uh paid or like the expense is incurred. Not then.
What do you again say? I did not get the answer question.
I mean, it's only let's say recorded at the reporting date and not at the day when it's due, or like when the expense,
Mm,
the prepaid amount, for example, here
just look here.
completed.
I have got your question now explaining it. Let's suppose our reporting date comprises of 1 year, that is from 1st Jan to 31st December. Done? Because we have to prepare financial statements, balance sheet, P&L at 31st December. Now 1st Jan, then Feb, then March, April, May, June, July, August, and so on. Let's suppose one of the prepaid occurred in March. Done? And that
Yeah,
prepaid was for 1 year. So how this prepaid will be treated, or when this prepaid will be end? Let's suppose if this is our current year is 2022, then this prepaid will become complete on March of
2023.
2023. But in between, there comes our reporting date, that is 31st December. So in this period, from March to December, there are 10 months. So we have to adjust expense for how many months? 10.
10 months.
This is the concept of adjustment. Then
Oh, okay. So
okay, one minute,
basically,
one
the
minute, one minute,
adjustment entry is for, okay.
1 minute. You will also get this answer. Let's suppose the prepaid for 1 year or 12 months was 120,000. So according to the December year end, for the 10 months, we will have expensed out 100,000, and the remaining 20,000 will be treated as our closing balance. So this would be our what? Expired
Expense.
prepaid or expense. Then
Yes.
got the idea of adjustment?
Yes.
This
So
is
basically, adjustment entry for prepaid and unearned is for the reporting
yes,
date.
yes, yes. Just like accruals.
Oh, okay. You
Then
can only make it on that day.
sorry,
Got it. I said that you can only make it on that day.
yeah. And if it is given in the question, then that prepaid is the prepaid is made on some date, then it is understood we have to adjust it on the reporting date. No, if it is asked to do so or whether or not, we have to adjust it at any cost. Then
Okay. Yes.
or just like in required, there will be only one line that prepaid or prepare all relevant adjusting entries. Now, if you see there is prepaid, if you see there is unearned, if there is an accruals, then you have to make all of the adjusting entries in that part. Done?
Yeah.
Great. I am rubbing this part. This is the extra part, and you will get in the recordings as well. Okay, similarly, the same concept is applied on unearned. How it will look like? It will look like this. This is opening, this is closing, and the middle section represents what? It is
The income?
earned. Then,
Yes.
so it is opening unearned, it is closing unearned. And the middle section represents the income earned. So if I write any example directly, Mr. X receives $3,000 in advance as tuition fee for 3 months. At end of month 1, he recognized income of $1,500. Now what would be the entry? Entry is fixed. Adjusting entry would be
Yeah.
unearned debit,
And then
unearned,
income credit.
unearned fee debit because it is fee, and fee income would be credit. So only one thing needs to be insert is to be the amount. What would be the amount?
3,000.
Why? Adjusting entry.
Because, oh, it's the adjusting entry?
Yes, yes.
Okay.
Obviously, unearned is always
Oh, I
adjusting
thought
entry.
it was the main one. Hmm.
Main one would be
One sec.
always cash debit, unearned income credit.
Yes.
Now you can see how the old concepts are evolving and
Hmm.
embedding in these concepts. Unearned fee debit, fee income credit.
Yes.
Amount.
So 1,500.
Amount would be 1,500. Another example. Now just tell me the amount.
Hmm. Well, since it's new, it's 3,500.
It means that all of the unearned income was earned.
Was
Then,
earned. Yeah.
so it would be unearned fee debit, 3,500. Now see, at the time of receiving, and at you may say adjusting entry. At the time of receiving, what would be the entry? It would be cash debit, 3,500 and unearned, whatever it is, fee or whatever, will be credit. Now it is fully earned, so it will be reversed. Unearned fee debit and fee
And
income
the fee income
would be
credit.
credit. The whole amount would be earned. Or it may be given in like question is that whatever the opening unknown liability is earned during the period. So in these types of adjustments, in these types of questions, the wordings of the transaction, the wording of the narration is very important. Done?
Yes.
Any issues?
No.
Okay. Now take the example of another adjustments. We have discussed two adjustments right now. The other two is simple, that we have discussed yesterday. Basically, it is 3 and 3A. 3 is accruals, and in its accruals there are two, that is receivable and payable.
Payable.
Receivable converted to income and payable pertains to expense. Now example. Mr. X was hired on a monthly salary of $3,000 to 500 on 1st October 2022 by PQR company. Done. At year end, that is 31st December, not at, it would be till year end, that is 31st December. Company was facing financial crisis and X salary couldn't be paid. This is the situation. But obviously they have to pay in the coming future. So the required is entry of above scenario made by Mr. X, how he will account for it, and made by PQR company. Done? Can
Yes. Is it the accrual entry?
obviously we are doing accrual, so it is accrual. But how they will
Oh,
be, no, in question it wouldn't be given that beta this pertains to accrual, this pertains to unearned. You have to judge what is the case. So we will practice the questions, but since this is accrual, but what entries would be made by X, what entry would be made by PQR company? A bit think over it and let me know. 5 minutes.
I can answer right now.
Okay.
I think I know.
Okay. Wait. This is Mr. X. This is PQR company. Yes, please. By X.
So it would be salary receivable,
Salary
debit,
receivable, debit, and
and then salary income or just income.
salary income. Full.
Salary income. Okay.
Done. Amount.
Is it 3,500?
No. Then what it should be?
Is it part of that?
Sorry.
Is it part of 3,500? For example, just for the 31st December, the
He was hired on.
last month,
He was hired on.
1st October.
And then after October,
November, December.
then so he was not paid for 3 months. And year end comes, reporting date comes. So how much month salary he will be booking as the receivable? 3 months. Getting this point?
Is it 3 into
Yes,
3,500?
of course, of course. It would be
But why though? Because salary is paid per year.
why salary is paid per
Isn't
year?
that
This is the case.
oh monthly salary?
Written,
Oh,
clearly
okay.
written.
My bad, my bad.
Okay.
Yeah. I just read salary.
10,000.
Yeah.
Then
Yes.
these little avoidance may cause some silly mistakes.
Yes.
And what about PQR company?
So it would be salary expense debit, and then salary payable credit,
Salary payable.
and the same amount,
Yes.
10,500.
So the accrual concept is a bit simple rather than prepaid and unearned. We have to see if something is payable, just write the respective amount and expense debit, payable credit. If something is receivable, just write income. So just write receivable and the next credit would be income. So accrual are adjusted in this manner. Done?
Yes.
Now number 4, adjustment. Bad debts, which we have done. Whatever the case, the entry would be bad debts expense debit and provision or allowance for bad debts credit. Then, but what is the trick or the problematic area is that we have to see the amount for whether we have to increase the provision to some extent or whether we have to further provide the provision by any percentage or whether we have to restrict the provision that we have done in that question which I have given for you practice. Remember that question?
Yes.
Now the fifth adjustment. Are you saying anything?
No.
Now the fifth adjustment is of again depreciation. Oh, oh. Depreciation Again, quite simple. Again, we have done the entry adjustment. It is depreciation expense, debit, and allowance for depreciation or accumulated depreciation, credit. Now, this needs to be discussed a bit further. In adjustments, we may be told that, now listen carefully, we may be told that company's policy is to apply depreciation of 5% on cost. This is the one scenario. Or it may be given that the company's policy of depreciation is 5% diminishing balance method. So here the distinction is on cost or diminishing balance method. Whenever there is written on cost, it means that it is a straight line method, the method number one which we have discussed. And diminishing balance method is method. We will discuss it in detail, but for the purpose of adjustment, what we have to do to calculate the amount, because in adjustments, calculation of amount is necessary. So what we have to do, let's suppose we have given some data about the fixed assets. That is, we have given, let's suppose, building cost. Building is asset, it would be in debit amount, dollar 10,000. And its accumulated depreciation of building, it will be credit amount, and that would be dollar, let's suppose 2,500. Then this is the data. Now we will apply the both above scenarios in this data. How to calculate depreciation on the basis of 5% on cost, and how to calculate depreciation on 5% reducing or diminishing balance sheet. If it is said that, let's suppose we have been given that criteria 1, 5% on cost. This is criteria 2, 5% diminishing balance method. That entry would be same in both circumstances. The only difference would be of amount. So I am also writing here depreciation expense debit, allowance for depreciation credit. Again, depreciation expense debit, allowance for depreciation credit. Now what we will do? Nothing. Simple. If it is on cost, just apply this percentage on cost, the given cost, that is 10,000. 10,000 into 5%. What is this?
500.
500. So amount would be 500. Done?
Yes.
But if it is diminishing balance method, we have to subtract cost from accumulated depreciation. That is 10,000 minus 2,500. The remaining amount would be what? 7,500.
Yeah.
Now apply the percentage, 5%. What would be the amount?
375.
375. Simple. This is the difference. In cost or straight line method, we have to apply percentage directly on cost. And in diminishing balance method, we have to apply percentage on cost minus accumulated depreciation. It is also known as written down value, book value that we had discussed. It means in diminishing balance method, the percentage will be applied on book value or written down value. Done?
Yes.
Any issues?
No.
Now there is simple one adjustment left, and we have good 4 minutes. Let's complete it in this. It is the use of office supplies. Basically, what are office supplies? Office supplies are initially classified as asset, and they are expensed out. Examples of office supplies mainly include like calculators, small items, punch machines, box files, etc. that are kept in bulk in store form. When organization acquires it, they keep it in a store. They will treat it as asset, and we will make entry when we will purchase it. We will make entry as an asset. Asset is coming, so we will debit office supplies and will credit cash. Let's suppose $2,000. Miscellaneous, we have purchased calculator, punch machine, files of $2,000. Now, since they are required by employees on need on basis, so the storekeeper or the manager admin will issue it to them. Let's suppose some of the employees requires files and some of the requires calculators, 1 2, and they amounted to around $1,250. So it will be treated as that we have from this asset, we have used it, we have issued it, they will be treated as expense. So their adjustment entry will be, the office supplies adjustment entry would be office supplies expense debit 1250. And since asset is now decreasing, this asset in the warehouse is now decreasing from the warehouse or the storeroom. So the asset office supplies will be credit 1250. Then, so this would be the adjustment of office supplies. Got it?
Yes.
Any issue?
No. So even this adjustment entry is done on the reporting day.
Obviously, every adjustment are on the reporting date.
Oh, okay.
Done. Now this
Yes.
is what all about the adjustments, and we will do a practice questions in the next sessions. I will upload some questions as well. You can try it. We will do a full-fledged question and full accounting cycle of these questions in the next 2 or 3 weeks or sessions. So we will have a comprehensive, uh, you may call it comprehensive questions and comprehensive understanding of accounting cycle. Done.
Yes.
So today our session is end till here. Done.
Yeah.
Okay. Allah Hafiz.
Allah Hafiz.